Hello and welcome to Market Watch for the end of the week that started on the 4th of December 2017. Two things to concentrate this week. I've spoken quite a lot about what happened on Tuesday with the RBA, and please check out the video that we did with Tony. That's a really good way to wrap up what happened there, and I'll leave that. I want to look at the data and what this week actually entailed. Retrospective data is certainly part of it with GDP, and then you've got the trade balance numbers as well that came out on Thursday. Let's look at GDP. As we've been talking about all the way through the second half of the year, the biggest concern at the moment is around consumption, and that clearly came out in the GDP figures. So quarter on quarter came in at 0.6 of 1%, saw the year-on-year growth at 2.8. It's not bad. Was below consensus by 0.2 of 1% on the year-on-year figure, 0.1 on the quarter figure. That's a little bit unfortunate. There were definitely bright spots in it. Net exports, we already knew that. Government spending, also knew that. Private spending was starting to show signs in that third quarter of moving up, which is also nice. Consumption's the concern. I want to really show you the chart that's on screen right now from Morgan Stanley. I think this is an amazing chart to really look at. This shows you the debt to income level, the level of savings, and the amount of debt held. And you can see that debt to income that everybody refers to now pushing up and above 190%. But what's really concerning as well is that you can see the collapse in savings. And savings is now below a rate that Australians tend to be quite good savers, and they're moving away from that. And you saw that in the numbers. It then goes back down to the consumption side, that you can see that consumption is weak. And that is a real concern because it is a big component of GDP. And the expectation with the way wages are going is that that will be under even more pressure. And that was the real big takeout that I think you really need to look at out of the GDP figures. And therefore, people are starting to question whether or not the RBA's expectations for 2018-19 around GDP are slightly optimistic. Maybe the catch will be around net exports. And I've said that before, the Chinese story is there, which I think is a nice segue into the second part of the data you need to look at, which is the trade balance. Everyone expected it to be fairly soggy. I think the expectations around it were probably overdone. So seeing a trade balance of only 105 million instead of what was expected, which is around about $1.6 billion, seems like a massive miss. It isn't as bad as what it seems. Net exports declined by 3%. You saw imports up by 3%. So net, there's a bit of a movement there. We knew also the Chinese really dropped off in October, so you shouldn't be too upset with that. What you need to look at is that if you look through the trade balance data for the year, it's outstanding. And I think that's the real takeout of this, is that there will be a bounce back in November. And the feed into Q4 GDP looks reasonable. The CapEx numbers we saw the week before looks really positive. All that, therefore, maybe the saving grace, and private investment is starting to show signs of being that saving grace. So look through the figure that happened on Thursday, because I think it's actually probably clouding the judgment. But all in all, the catch and probably the biggest takeout of what happened this week is consumption, like feared and like expected, is moving in the wrong direction.